Hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not an investment advice. So this video is another candlestick chart analysis video, and look at this. We have here a breakout. Here we have some kind of support level. I'm waiting now, and that is what I'm doing. I'm waiting now that this candlestick here, this price, will go down here close to the 20 EMA, and after it's touched the EMA, I'm expecting a pullback. Yes, because you see price is going in an uptrend. We have here the 200, the 100, the 50, and the 20, and price is above the 20. So we have all in all an uptrend. You see also price is in between of the 1 deviation and 2 deviation, and so I'm expecting now that price will go up further. So I wait now that price goes down to this level, and after this I will do a call, and if it's not moving now, I will do a call now, because I'm expecting that price will go up further, because this is telling me here, everything is telling me that we are going up, and that this will be a morning star. Yes, that will be not a continuation of the trend, it will be a morning star, because you see that is telling me that we have here a strong uptrend, and that is how you have to understand and how you have to do candlestick analysis, technical analysis, yes, and a candlestick chart analysis. So let me see. All those trades which I'm doing here are based on those things which I have explained in my ebook. So get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be used also for Forex and digital options. So get this ebook, it's for free, and you'll find the link in the description. And in the description you will find also the link to the Facebook group. Join the Facebook group, don't miss this opportunity. Yes, so okay, that was this one. So let me see if I can show you now some trades based off those things which I have explained in the ebook. So let me see what kind of trades. Why I have done this trade. You see here this kind of area here, that was this one, and I entered after this kind of I would enter in this one. I didn't enter in this one, I entered in this one, yes, because here I entered into a call, yes, without any kind of rejection, because this is one of those no rejection trading setups, which I have explained also in the ebook. Yes, I can show you this later. And because the crossing, and I have explained this in the video, because the crossing of this doji was so close, yes, to this area here, I entered into a call here because I was expecting a morning star, because the 20 EMA was heating up. Yes, the 50 EMA was heating up, the 100 crosses the 200, and they are all here in this kind of scenario where you see that is a strong uptrend. Yes, but you see it was also close, because the next candle was going down, yes, but it closed here so close to the EMA that I was sure that this would be in the money because of this wicks here. Yes, this wicks were those one which was telling this. So I would enter also in this kind of trade here, yes, because after this uptrend, yes, and this stalling here with this dojis and this hammer, yes, hangman, I would enter into this kind of trade after price tried to go above, and on this level here I would enter, yes, into a put, yes, and then I would enter also here into a call, because this is uptrend, and this was the one deviation rejection here, and on this rejection here I would enter into a call, because we have here a nice engulfing candle, or if you want to see a morning star, yes, these three are a morning star. So that would be the confluence what I'm talking about, which is giving me the sign that we are heating up. So, and this is another one which I would do here, for example, this trade here on the 200 EMA, because this inverted bullish hammer would telling me after this Bollinger squeeze, yes, that we are going into an uptrend, and that's the reason why I would enter into this trade here without any kind of rejection. And that is also because I saw the question in the comments that somebody asked me, if you have a double top, how you know that price will break through the neckline if you enter into this previously. You can enter into a before going to a breakout of a double bottom, yes, on the neckline. So example, let's say we have here, I have to withdraw this. So let's think that this will be a valid double bottom here. Yes, this is a double bottom. Yes, and we have here this neckline. In this case, the neckline is probably the 200 EMA. Yes, and how do you know that this candle here, this running candle here, will break through this neckline? And this is why I'm showing you this, because of this candle. This candle is telling me that we have huge buying pressure. And if you have such a candle before the neckline, also here, you see here, if this one, this is the neckline, yes, you see, if you have such a candle before the neckline, you know that you can enter into this trade. And also other candles, like it can be every kind of candle, yes, which are showing you that you have a strong trend. And this one here is such a sign, yes, this inverted bullish hammer. And if I see this kind of inverted bullish hammer before a neckline, yes, or a hanging man before a neckline of a double top, I would enter almost every time, yes, because those candlesticks are telling me that we are going to break through this neckline. And that is how you can distinguish neckline breaking or not, only because of price action, only because of such candlesticks which are showing you almost this before the neckline will be broken. Obviously, you have to understand also to get some kind of margin of safety or some kind of rejection, which can be much more evidences to get into this trade. Yes, don't trade this kind of setups blindly. You have to understand this. So let me see if I can show you some more of those trading setups which I would have done. So for example, we got here this kind of engulfing candle, which I would immediately understand. And after I would understand this, after this kind of consolidation area, I would enter into this trade after the rejection from the 200 EMA anyway. Also, if the others are flat, I would do this trade anyway, because the EMAs are flat. Yes, they are not working anymore, and that's the reason why I would enter here on the rejection on the 200. Yes, because I would expect after this engulfing candle that there will be a downtrend. It's not a really strong downtrend, yes, but it's or a long downtrend, but it's anyway a downtrend. The engulfing candles, is that what engulfing candles are telling you? If you get engulfing candles, you can expect, like on the double top, double bottom, or other kind of candlesticks, that there will be a trend after this. That's what's about, yes. So, and then I would do also this kind of trade here after I would see that this candlestick here got a rejection from the 50 EMA and the 20 EMA. I would enter on this rejection here from the 200 and the 50, yes, and then enter into a put here, because I would expecting that we are healing down here too. And after this, we got this uptrend. So I would probably doing also this kind of trade here, yes, this kind of trade. Because why? Because we have here, yes, a consolidation, yes, Bollinger Squeeze, yes. Here you see also Bollinger Squeeze, and because I got the question, how can I recognize a consolidation area? You see Bollinger Squeeze, and you see here consolidation. You see Bollinger Squeeze here, yes, squeeze, squeeze, and what do you see here? Consolidation, yes. Here is consolidation. This is consolidation area. And that is the primary part to understand Bollinger Squeeze, yes, a consolidation area, where if you see if Bollinger bands are squeezing, and you see the one deviation here, for example, the squeeze is between the one deviation and the one deviation Bollinger band, yes, and also here it's the squeeze is here between the two deviations, the one deviation Bollinger band. So you can almost think where it will appear, yes. So that's the range in between it will act, where the real bodies will act, because the wicks are breaking almost out to fool you. Yes, that is what's about. So, okay, that was this one, what I have shown you here on this one. Let me see if I can show you some more of those kind of trading setups. So I would do, for example, immediately, and you should see them, those things also here. This kind of trade here after this engulfing candle, and you see those engulfing candles are telling me, and you will see that this kind of trading setups will be valid also for Forex. When I'm going to show you how to trade Forex, yes, and how to do this, I will show you those kind of engulfing candles, because they are important. They are the, and over engulfing candles at major key level, because those engulfing candles are telling you that there will be a trend coming up. Or here, the same valid for the morning star. The morning star is telling you that we get an uptrend, yes? So you can do this kind of trade first of all, because you create this rejection, and then you can expect, obviously you have to get some kind of candlesticks like here. For example, you get this morning star here, yes? This morning star, and then you enter into this trade, because that's what I told you. Also, if it's close to the 20 EMA, this candlestick is telling you that it will break through this kind of support and resistance area. Yes, that's the same valid for this kind of hammer. Yes, this hammer is telling you if there will be the 20 EMA, it will break through the 20 EMA, because that are candlesticks which showing you that the trend reinforce. They reinforce the trend, yes, and that's the reason why they work out. So I would enter also in this kind of trade here, in this kind of candlestick. I would wait till it got a little bit down, yes, to see the movement, and after it got a higher entry point, I would enter into this trade here, because you see here is rejection from this level here, and this is also the evening star, and so after this you see almost here a downtrend, yes. So, and I would enter into this kind of trade, because the EMAs are flat here. You see they are flat. So you have explained this also. So you have to trade almost at the edges of the Bollinger Bands, lower Bollinger Bands or higher Bollinger Bands. Yes, mostly they will not even touch them. Yes, but if they are flat and price is ranging, you should trade at the edges of the Bollinger Band. So I would trade also this kind. You see again this kind of setup here with an engulfing inverted bullish hammer, which is almost a good trade. That is one of my favorite ones, yes. And also this one here, what's looking a little bit different. But if you do this together here in candlestick math, you have the opening price, yes, you have the closing price, and then you see what we have here. We have nothing else than a doji, and so you have here a nice, yes, support area, and so you can do this kind of trade. And after this, because this shows you that the uptrend will continue, you could enter also here. Here we have a round number again, yes, which would act also as support level, and that is how it works. And here, then after this breakout, you get back to this support level, and then you can enter into this kind of trade again, because you know this is a pullback, which I have explained also in the ebook. Yes, the pullback or the last kiss. Search for it, and then you can show this video. So here this I have done before, and you see if you can, and you have to do this also. You have to analyze the past of the chart. You have to look at this, and you have to find any kind of engulfing candles, and then you know how to trade them here. Engulfing candle, rejection from this area, and then enter into a put, and you see in a half an hour you make here at least, or in three-quarter hours you make here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. Yes, so your trading session is done. So I would say this would be enough. If you like this video, do a like. Don't forget to like the video, subscribe to my channel, and if you have something to say, let me there some comments. I try to answer your questions always. I read them. Mostly I do not answer immediately, but I read them, and then I try to apply those things in the next video. So I would say stay safe and bye-bye, and don't miss to join the Facebook group. Don't miss this opportunity. So stay safe and bye-bye.